Welcome to the C-Suite podcast with me, Russell Goldsmith. I'm here at Money20 Europe that's taking place at the RAI in Amsterdam, and we're recording this episode in partnership with LHV Bank. I'm on their booth in the expo hall, and I'm going to be chatting to a number of the speakers and attendees at the conference to get a real flavour and overview of all the discussions taking place. Really hope you enjoy these conversations. So I'm now joined by David Jofre, who is SVP Business Development at Shift4. David, thank you so much for joining us.
Yeah, thank you so much for inviting me.
No, pleasure. Now, we've not actually featured Shift4 on the podcast before, so why don't we start with a quick intro to the business?
Sure. So Shift4, as most of the people know, we are an acquirer. We are a publicly listed entity in the New York Stock Exchange. Run the business for more than 25 years already. I'm processing around 260 billions in transactions. I would say that we are not new, although we have not been in the podcast. Mainly as an acquirer, we are covering United States, we are covering LATAM, we are covering obviously Europe, Australia, and Asia. So outside of Africa, we are covering all the different markets.
Excellent. Well, good to finally get you guys on the show. Now, the business has grown through a series of quite major acquisitions. It would be good to understand what the company looks for when acquiring companies, and how does that strategy also help your partners differentiate and grow?
It's a good question. I would say the way Shift4 has done his acquisition, or the M&A, let's say, strategy, differs from other acquirers that they buy books of or portfolios, let's call it like this. In our case, we are trying to do M&A based on two main angles. One angle would be to allow our partners, I would say, to have additional value in terms of like new products, new functionalities. So for us, it's like speed in terms of like to market, to develop a specific product or functionality. And the other one would be, the other angle would be to expand into a new geography, new region, so we can accelerate the time to market. If we look at last year, and I will explain a little bit how we can bring value to our customers or to our partners. We did several acquisitions, and maybe the major one has been Global Blue. Global Blue is like the leader with 80% of the market share in terms of like tax-free and DCC. We bought Yocuda, digital receipts. We bought GiveX. Everything was last year with loyalty and gift cards. So at the end, what we bring is like card present, card not present, an omnichannel value proposition to payment institutions, PSPs, other gateways or direct merchants, where they can combine, I would say, a full 360 omnichannel experience, right? That combines, I would say, from the card present devices with everything integrated, loyalty, gift cards, DCC, tax refund, etc., to the e-com side with orchestration and all type of product, I would say.
So when you're bringing all these companies together in such a short space of time, how does it work in terms of the culture fit? Is that part of what you're looking for as well, or is that part of the process in bringing everyone together?
Yeah, so if we look at Shift4, just to put as an example, how Shift4 was looking like maybe 3-4 years ago. 3-4 years ago, Shift4 was a US company. 100% of the employees were in the US. And if you look at Shift4, I would say 3-4 years later, we are a company of 7,000 employees, and from those, 60% are outside of the US, right? So our growth has been, I would say, heavy. And one of our main objectives in terms of like M&A or expansion is to fast integrate everything that we buy, right? So we do not want to have like separate platforms, separate infrastructure. So we try to adapt from the product perspective into a fast integration, but also in terms of team. So we do an immediate, I would say, merge of the team, and we get a better approach in order to serve our customers.
Yeah, interesting. Okay, now an area that we're kind of focusing on today on a lot of the interviews is stablecoins.
Yeah.
As they gain traction in Europe, what do you see as the most realistic path to mainstream adoption, but also how does Shift4's crypto stack fit into that future?
Well, we do see stable coins or crypto as as a little bit the future. So if you look at how the CBDCs, how digital euro is going to be soon in the mainstream, right? We have been preparing for this for the last, I would say, 3-4 years. We are currently having multiple crypto customers. We have fully developed an on-ramp program, so we can support just from exchanges, on-ramp providers, and also we have developed some additional products, I would say, that to fit, I would say, standard customers, right? So we have pay with crypto capabilities. We have a stablecoin settlement capabilities, among I would say other solutions that we try to bring into the crypto space.
Let's go beyond stablecoins. Tokenized money and instant payments are evolving fast from central bank digital currencies and new crypto-based rails. So how is Shift4 preparing for this next generation of settlement infrastructure across all the markets that you operate in?
Yeah, so as I was mentioning just before, right? So we have been preparing ourselves for a long time already. We are seeing an increase in adoption of stablecoins. The stablecoins, obviously, it's not yet mainstream. We need to acknowledge that. But we are seeing like forex companies, crypto companies. We are seeing gaming. We are seeing OTA. So customers that are willing to expand fast, move the money fast across different jurisdictions, do cross-border transactions, get those settlements really, really fast. Is where we see, I would say, the value and where we see the demand, right? I think that this will increase over the time once the digital euro is in place, when I would say the rails and MiCA, that it's taking a proper effect this year as well. We will see potentially an increase on the demand.
Okay, final one for you, David. Let's finish off with a question on AI. We have to. What does effective real-world AI deployment look like for you? But also, where do you see the biggest gains for partners as well?
Everyone's talking about AI.
Yeah, of course.
I think that it's a little bit of a bubble, right? But the reality is that we are using AI, right? So I think that we need to differentiate from plenty of different things that everyone wants to do into AI to the real gains that we can provide to the merchant. So currently today, we are using AI for, I would say, two main things, aside from internal operations, etc. But the two main gains that our customers can take about AI that we have fully deployed would be fraud prevention at most of the quarter. But the one that I would say that there is unique functionality is, I would say, for partners, PSPs or ISVs, etc. We have enabled AI in order to optimize our onboarding flows. So currently today we are doing AML, risk analysis, setup of the meets, credentials, etc. And all this process takes us less than 24 hours. And enabling, I would say, our partners to go live with e-com or with card present in a really short period of time.
How long would that have taken previously?
It took us a while. Before, I would say, we shortened up from 15 to 20 days to 4, and now we have optimized that into less than 24 hours.
Amazing. Listen, really good to get Shift4 on the podcast finally. David Jofre, thank you so much for joining us.
I highly appreciate your invitement. Thank you so much. Appreciate it.
So joining me now is Nabil Manji, who is Executive Lead Enterprise Growth and Partnerships at Global Payments. Nabil, thanks for joining us.
Thank you so much for having me. Happy to be here.
Yeah, no, pleasure. Now, you were on stage yesterday in a session where you were discussing whether governments and fintechs are clashing or competing on payments. So, yeah, tell us what the key takeaways were that you left the audience with.
Yeah, it was interesting. It was a fun panel to be on, lots of fun opinions. I would say the one main takeaway is, regardless of whether you're from the public sector or the private sector, everybody's got the same end goal or interest in mind. Everybody agrees that, whatever Europe ends up doing from a payment systems perspective on a go-forward basis, it needs to be something that works for merchants, something that works for customers, something that works for ecosystem participants like Global Payments. So I think there's agreement on the outcome we're all driving towards. But of course, there are some differing opinions on what the best way is to get there and whether the public or private sector is better suited to be the party that does that.
Yeah. Okay, now across Money20 on their agenda, they've got kind of 4 key pillars. We're hearing about AI, rebundling, rewired infrastructure and faster mover regulation. from your vantage point, which of those forces is having the biggest real world impact, let's say on global payments right now?
So I feel like I have to say AI, right? You can't be at a conference in 2026 or talking about something without saying AI. So of course AI is having a big impact. But the one I'd actually say that's more interesting is the rewiring piece. I think, there's a lot of discussion around new and improved payment rails, whether it's things like real-time payments in the US, which are finally starting to gain traction, whether it's, Wero or the digital euro in Europe, whether it's stable coins. So there's a lot of different conversations happening around rewiring and what that means in terms of new payment rails and capabilities and what it unlocks. And to me, that's probably the most exciting of the four.
Well, let's move on to stablecoins then. You just mentioned there, they're gaining traction as a payout rail, but adoption is still early. What's the most realistic path to mainstream usage in Europe? What needs to happen for merchants and enterprises to trust these rails at scale?
So it's interesting. Stablecoins are definitely having their moment, rightly so. It's a fantastic technology. The thing I'm actually most excited about, though, for them, and where I think they're going to see some more mainstream usage, is actually more on the treasury and liquidity management side. So helping large, complex, multinational companies, particularly in the payment space or financial services industry, that need to manage and transfer liquidity all around the world in different currencies, ideally as quickly and cheaply as possible. I think that's where stablecoins are going to have their mainstream impact or use case. And I think some of the main things that need to happen to get us there, one is we as an industry need to find a better way to get stablecoins integrated with the back office of all the financial services and payments companies. It's great to have a new rail, but if that new rail doesn't integrate with your treasury management system or your reporting and reconciliation workflows and systems, then it becomes really difficult to scale. And so I actually think some of that plumbing, if you will, the not so sexy stuff about payments is really where the value is going to be created and where some of the integration needs to happen for stablecoins to go truly mainstream.
Okay. Now, as instant payments, tokenized money and new payment rails evolve, what do you think the future settlement stack looks like for global enterprises operating across multiple regions?
I would say real-time and modular. So what I mean by that is a lot of settlement today is still file-based and batch-based, fixed frequencies like once per day. I think we're moving towards a world where things are being streamed on a transaction-by-transaction basis, settled more frequently. And to do that, you need to have integrations to a lot of different clearing systems, payment rails, move from files to API-based solutions. Once you have all that in place, and I think you get to this settlement infrastructure that is really interesting.
Okay. I want to finish off, Nabil, with one on regulation, if that's okay. We're in a moment where compliance is moving from a cost center to competitive advantage. How do you see regulatory clarity shaping the next wave of innovation in enterprise payments?
It's huge, and I think the example is really, again, in the stablecoin space, right? Like we've seen the Genius Act in the US, MiCA come into fruition here in Europe, and I think those regulatory guardrails, regardless of your opinion on whether they're perfect or not, just that clarity gives people so much comfort in investing and exploring the new technology. And we're seeing that in the market.
Perfect. Listen, really appreciate your insights today. Nabil, Manji, thank you so much for joining us.
Thank you for having me.
So I'm thrilled to welcome back to the podcast Ugne Buraciene, CEO of Payabl. Ugne, thanks so much for joining us again.
Thank you so much for having me.
Now, listen, we last spoke just a few months ago in March at MPE in Berlin. At that time, you said that Europe's payment landscape is diversifying so fast that merchants want simplicity and reliability. What update can you share from the session that you spoke on earlier today, which asked if Wero can solve the payments paradox?
Yeah, that's a really good question. And I think what we spoke before in MPE was about the fact that the European payment landscape is actually quite fragmented, which is a surprising thing to say. Because it's when you think about Europe, you think that it's all sort of one region and it should be pretty simple. But actually, it's on the contrary. Almost every single country has a payment method that is not linked to one another. So we don't really have a pan-European payment option apart from cards, to utilize. So the panel discussion was actually very interesting, and Martina from Wero definitely shared their vision and what they're looking for you to do. Some really cool updates is that Wero is also launching doing recurring payments as well. And in general, the purpose and the direction that is taking is to really have an alternative for the region and to really just eliminate, this fragmentation and complexity, that we have for Europeans' payment landscape.
Yeah, well, picking up on that then, how close are we to it becoming a true pan-European alternative rail for merchants who rely on that recurring billing?
Look, it takes time for anything, and adoption in general takes time. But Vera is definitely, I think, making good railways into that, and they're definitely focusing also on the right product catered for this market. I don't think that we're months away, but we're certainly heading into the direction that in the next couple of years we will see a significant shift, and I think that's already good enough to say that okay, we're getting towards to a system that that we can use pan-European wide, and it really caters for all types of merchants, and this is what we're really looking forward to.
Okay, now whenever we speak at these events, you're always extremely busy. Today at Money 2020 is no different. You've been on a second panel, which was about AI-driven compliance from cost center to competitive edge. So how have you been using AI in Payabl's onboarding compliance framework?
So we are very careful, and we never really jump to the hype. And we've been very selective in terms of how we utilize AI in Payabl. First, we started from fraud management systems. So this was sort of our core and key component where we really integrated AI, and we also partnered with SIFT to do that for us. And then slowly we worked it into our onboarding processes. And now the way that we're seeing it is that it really cuts time for certain operational matters. It doesn't really replace what we do, but it certainly makes us, more efficient. And we are focusing on huge, data-driven tasks, which can be really simplified, with AI. So, for example, if you're doing onboarding and you want to get, a certain, pre-check, really fast without, having someone, manually, do that, we already have, tools and capabilities, to do that very fast, and it only takes, 30 seconds, right? The human factor is not taken out. The way that we see it is that decision ultimately is always ours. It's only that the time that it takes to do a certain thing, or also to take that decision, is there. And for us, what is really important that we still have the accountability, but the trace of how we take that decision is tracked, and AI helps us do that actually pretty well.
Perfect. Now, one of the topics that we're focusing on with all the interviews, or most of the interviews today, has been stablecoins.
Yeah.
So I'm keen to get your opinion on that. Where do you see stablecoins fitting into Europe's payment stack in the near term, especially for merchants who want faster, cheaper cross-border payments?
I think I think your answer is there already. Cheaper cross-border payments. That's what I think drove the adoption of stable coins in the first place.
Yeah.
The way that we see it is that it's in two ways, in the way that we are utilizing it and offering it to our clients. One is the settlement side, so exactly that, cross-border, making it fast, simple, and maybe cheaper, and also in some cases. And the other option is just as a payment rails of acceptance. So meaning that if there are any clients that want to pay in crypto, we facilitate that. And I think these two things are really the ones that are really moving the needle, and I think that this is where real adoption is taking place, and we're giving that option to our clients as well.
Okay, now it's always important to get your opinions on Wero, stablecoins, payments, whatever we're talking about at the various conferences that we interview you at. But the one thing I want to ask you about is Ironman. That
I hope my face lit up immediately.
Yeah. Now, I understand you've just flown in from competing in an Ironman challenge in Hawaii.
Correct.
With a number of your team. I'm amazed you're still kind of like
in one piece.
managing this interview. What possessed you to organise it? What was the experience like, both personally for you, but also as as the whole Payabl team?
Do you have an hour or so?
No, come on, tell me all about it.
Okay, so if we start from the beginning, I had my husband started doing a triathlon about 4 or 5 years ago, and we went to the first Ironman competition, and I have to say that I was very inspired and very much impressed, and they were the community there, and because it's not there is part parts of professional athletes that do that, but most of it is just basically amateur athletes who are doing it, for fun or for whatever other purpose, that they want. And I was really truly inspired because I was like thinking, okay, this is such a big challenge, and really people from women, any form and shape, people are just going and doing it as a challenge. And and it took me some time to realize that I really want to do it. But the first thought was already there. And then I took a decision a year ago. I said, okay, I'm going to do it. And I signed up for one, and I signed up for Kona, Hawaii, which is the most iconic Ironman. It's where it started. It's the most challenging one because of the terrain, because of the heat, because of where it's located, and that was the beginning of it, right? And I remember my husband saying, "Oh my God, you are crazy! This is like you can't swim. You chose the race that is most difficult. It's like, what are you thinking?" And I'm like, I don't know, it's Hawaii. I'm just going to do it, right? And I thought, okay, it's quite a special experience, and I thought there must be more people that want to do it, and I offered it to my team. And we had 10 spaces. At first I thought, okay, I will give 10 spaces for a sponsorship. And we said, okay, whoever wants to join this, challenge, and it's a year challenge because, it takes a year to prepare for.
Yeah, of course, yeah.
And there were 25, I think, people that wanted. And ultimately we ended up with 15 people going. So
Amazing.
There was a team of 15 people going to do the Ironman.
All paid for by the company?
Yes, all paid for by the
fantastic.
company. And not only that, because, as in business, you have a certain tasks, right? So we have a task, we have to go and compete, and we have to finish the race, right? So what does it take? I can't swim, so I organize myself, to get some swimming lessons and to do the trainings and whatever else. For the team that was in Cyprus, which is our larger proportion of the team that was coming from for Hawaii, we got a coach. So they had a triathlon coach for all of throughout the year, so they were able, to prepare. So we took it as anything you do in business, right? It's like, yes, it's a nice thing because it's outside, but it takes the same sort of structure and the same thought process. Okay, what are we lacking? What do we need to do? What is the organization required? And also then there's a responsibility of the individual, right? As at work and day to day, someone has to take that responsibility and accountability for their own success, right?
Yeah.
So there was a group goal and there's also the individual one. And finally it happened. So
and you all completed it?
Yes, everyone completed it. There was no people that didn't finish. And I'm still processing it, but the experience was really surreal. I think it was more than my expectations, and I think it's the same for the team. And it's also about completing something that looked a year ago as a totally, really so far away and so far-fetched in a way.
Yeah.
And now we did it, and we're like, oh, I can do that tomorrow or another day.
And are we going to see the evidence? Is there photos, videos on social media?
Yes, of course there is. I just didn't have a chance to put the post together, but we have videos. We have we have
fantastic.
all the and myself and Breno, our chief product officer, flew in yesterday. So, we were joking that someone has to make up for the money that we spent. But it was really a fantastic experience. And now I have the Ironman blues. So I'm just, thinking what will be the next race. And I decided that we're going to do it as a challenge every year. So we will choose a race somewhere. As you know, Ironman does many races all over, not only in US. They have, I think, in total 150 locations. So we decided that we will choose a race every year, and we will do that race as Payabl team every year. So here you go.
That's
now
fantastic.
You know first.
No,
first
but do you know what? It's so nice to hear a different side of you, because we always chat business, and this is a really nice thing to hear about. But also, like you say, the way it's kind of benefited the business as well, and that's maybe will inspire some other. I don't want my team thinking it though, because if I'm going to have to go as well, I'm not sure I can cope with that.
Not everyone can, I think, and it's but it's also what is interesting is that a lot of people think that it's a physical challenge. The mental part is much harder than the physical. It's physical, I think, is easier. You just do certain things and your body will adjust. But I think it's the grit to do it. This is what it's really impressive.
Brilliant.
And I'm so proud of my team, because every one of them spend the time, did what they have to do, and they were there, and they did it. So
fantastic.
I'm very happy.
Well, listen, thank you so much for sharing that. It was really good to hear.
Thank you so much for having me.
Ugne, Buraciene, thank you for joining the podcast.
Thank you so much.
So I'm now joined by Konstantin Stiskin, who is the co-founder, supervisory board chairman of Finom. Kost, thank you so much for joining the podcast.
Thanks for having me here.
No, pleasure. Now, you are speaking this afternoon on the future of fintech made in the Netherlands. So what I was keen to understand is, as a Dutch-born scale-up now serving more than 250,000 SMEs, if I'm right, across Europe, what makes the Netherlands such a strong launchpad for fintech innovation today?
So I think it's pretty well can be described with the way how we appeared in the Netherlands in the first place. So we started thinking about Finom in 2019, and in 2020 we actually started working towards building this company. And it's actually, if you remember, it was the year when the Brexit has emerged.
How can we forget?
Yeah, and we were thinking, okay guys, we have to find the place that will be the future capital of Europe, especially in fintech. And we analyzed all European markets, where to headquarter, and we decided to go for the Netherlands for a lot of reasons. So one of them is actually the strength of the regulator. It's quite strong regulator that is actually very much acknowledgeable about the fintech and the opportunities, how to work with them, and moreover they're reputational in order to work on the European level. Second, you can work in English. That's also important. Third reason is actually the quality of people. There is a lot of international people all over the world coming here, launching their tech companies or working in the tech companies, so the pool of talent is huge. The culture is very welcoming for internationalization and for directness and to get shit done in the end. And last but not least, is actually that usually when you start working in the bigger market, and you can see it, for example, in Germany or in France, the companies usually stay in those markets. They're not becoming pan-European. And if you're looking for a place, this can be pan-European capital for the European business. So in my opinion, in fintech, Netherlands is the place.
Yeah. And so what were the key moments or the key decisions during your own kind of journey, let's say, that accelerated your own growth?
I would say first of all, we wanted to be pan-European from the day one. So basically worked in the multiple markets simultaneously, because it's a fact how you build the org structure, the product, the infrastructure, all the layers. I do think it was an important decision that we stayed for. Second one, I would say the decision to focus on a payment rails first. So basically, there was a lot of shiny targets to go for, but we said no. We put infrastructure, we get our license, we put the rails in place, we control it, we have our own core, and we build everything from the ground up in order to ensure that the payment flows in the first place. So I do think on top of that, we're able to build and continue building. Otherwise, it could be quite difficult.
Yeah. Now, there's kind of four key pillars on the agenda here at Money 2020. One of those is regulation. What would a truly harmonized regulatory framework unlock for companies like Finom?
So, first of all, now we're living in the age of AI. Everyone is scared of that. And I would never said it like that before, but God bless regulation. It's the only reason that stops, I don't know, like the anthropics in order to disrupt what we're doing and allowing us to continue building, get funded, and continue delivering. So God bless regulation. Second is I would say that what's important about the regulators and the regulation in a nutshell in Europe, there are still local regulators which are, in a nutshell, political organization that's serving the goals of their country. And they also have to protect their land. They also have to be part of that and develop their land. And in the end, you have inconsistencies and arbitrage. So I do think the more centralization of the ECB side would actually that would be more opened and pushing some companies going forward, and eliminating the different localization pieces can allow fintech players to be larger on the European scale, and allow the fintech, if they're going to get stronger on the European scale, they're also going to be stronger on the global scale as well. So you need more hyperscalers, and in order to have more hyperscalers, you have to manage them not from the regulatory on the soil, but more like the single European regulator. So emergence of some kind of like European sandbox for the fintechs to work on a pan-European level could be a good platform for that.
Yeah, you mentioned AI obviously just a second ago then. So what do you see as the most credible near-term application of AI, and how are you preparing for the regulatory side of that?
So regulatory side, like you cannot prepare. So I would say the only thing, use AI but keep a human in the loop, because it's going to be human finally responsible for what you're doing and yourself as the management board or supervisory board. In terms of AI, like we launched AI accounting not so far ago. We're launching more products on top of AI. So I have my PR person that's, I'm not sure if I'm allowed to share what we're launching, but we're launching more products like that, ultimately bringing the final value for the clients. So there is a lot of AI that being used in order for operations, for compliance, for everything. But okay, those just improvements. But what it's important to say how they really change the way how the business operates and what the products we can build with it. So that's an interesting layer we're trying to solve here.
So what do you see as the most credible near-term application of AI? But also, how are you preparing for the regulatory side of it?
So what we think is, first of all, there is a lot of AI implementation on the back office and operations. You still need a human in the loop for the regulatory matters, but there is a lot of like improvements and speeding up and improving the quality that you can do there. So, but what's most interesting, how AI can actually help our customer base to be more efficient and to manage their everyday operations in life. So we already put an AI accountant in place, which actually works like incredibly well in terms of efficiency and the quality, and supporting especially small companies, which saving them a lot of time and money. And we do think that actually the way how the companies are interacting with their banks and how they're using financial services can be absolutely redesigned. Because the thing is, as a company, you don't have dedicated people, but you can actually, a lot of job could be done by agents if the agents are properly implemented to the platform. So we are changing our product. We're going to announce it in July. So I do think the new AI version of the Finom can be very market changing.
Excellent. We will stay tuned for that announcement. I'm going to finish off with a question on fraud costs, if that's okay. Where do you see the biggest gaps between regulatory expectations and operational reality when it comes to fraud, and how are Finom staying ahead?
To be honest, I think they're pretty efficient. To be honest, I think they get their job done in the end. They may be a little bit behind time, because basically the way how they build the overwatch of the market is built on top of the way how the financial platforms worked before. Now financials works quite differently, especially on the layer of the stable coins and the layers and the different like payment methods. So, and they miss a lot because they were not adapted to it with the way they built it and the way they overwatch it. But I'm pretty sure they will adapt. It's just going to take time.
Sure. Okay. Well, listen, thanks for sharing all that with us. Good luck with the new developments next month. We look forward to seeing that. Stiskin, thank you for joining us.
It's almost already next month. Thank you very much. Time running fast.
Cheers. So I'm now joined by Romain Berthome, Director of Product at Booking.com. Romain, thank you for joining us.
Hi, thank you for having me on the podcast.
No, pleasure. Now, you are on stage tomorrow talking about how the world's biggest brands fight fraud. What's the single most kind of important takeaway you want the audience to leave with, especially when it comes to balancing regulatory pressure with frictionless customer experience?
Yeah, I think you said it all in your question. I think whenever you deal with fraud, whenever you deal with compliance, really a lot of the science behind it is how do you ensure that you balance those requirements that you have from a compliance perspective, or how are you trying to mitigate the risk that you have, the risk danger that you have with the frictions that you're adding into your funnel, right? If you think about booking.com, whereas you're a guest and trying to book your holiday, or whereas you're a partner and trying to list your hotel room on the platform, you never want to have, cumbersome identity verification step in the way. You want to ensure that you can do that seamlessly. So it's really about how do you make that experience really embedded into your different flow and almost like invisible for those type of customer. So that's really the key important things for us is how do we leverage all the new technologies and solutions that are coming in order to ensure that, identity verification is never in the way of someone trying to book their holiday, for example.
Yeah. Now you mentioned fraud there, compliance, also operational resilience. They're all becoming major cost drivers. Where do you see the biggest gaps today between what regulators expect and what's actually practical for a global operating, a global platform operating across so many different jurisdictions?
Yeah. So I think, we talked first about cost, you mentioned the cost, but I think on the flip side of things, there is as well a lot of benefits to trying to remediate all those potential fraud danger or those compliance, gaps. Because one of the things we try to do, obviously, at Booking is how do we make our platform more safe and trustworthy? So, guests want to book there and hosts want to provide, their home, their hotels into the platform because they trust our ecosystem. So I think there could be a lot of benefits that are coming out of all the, the fraud solutions and the compliance checks and identity verification things we're trying to put in place. One of the big things I think at the moment is while we see a lot of engagement from the regulator, we see the regulatory pressure, increasing across the different markets, but we as well see, more solutions coming from the regulator, right? We are in Amsterdam today. We have, the EID framework coming for identity verifications, which kind of going to unify, really this the identity verifications across Europe. It's good, but as you mentioned, there is still some gaps that exist within the different framework. For example, when you think about EUD, why the framework has been defined, you see that per country solution will vary and information you will be able to check across customer will be different, which means you will still have to have some tailored solution for each of the markets, which kind of prevents bigger actors for us to easily scale. And when you talk more about the KYB side of things, when you talk about business and so on, while we got major uplift in the last recent years in terms of, company registries, cleanup of data and streamlined data and so on, we still see that, UBO's data, directors' data, and all those data still is, not easily available, not easily complete, which going to create frictions when you try to complete business verification as a whole. So I think the framework has evolved, but I think there is still some gaps that still needs to be addressed by the regulator to ensure that what they mandate to us in the regulation, there are solutions that easily are accessible by merchants in order to be able to resolve those gaps.
Can I push you for any innovations that would genuinely reduce cost and reduce friction for users?
You definitely can.
Go on then.
I think, it's the theme of the moment, right? Everyone is talking about AI and so on. And I'm really looking forward to as well, how can we integrate more AI as a solution to solutions that are already existing, right? When you think about how the, KYC industry and identity verification industry has been running in the past, years, a lot of this was document-based verifications, right? We have all tried to subscribe to some neobanks, N26, Revolut, all those things. We all had to provide our passport, proof of address, or whatsoever. And what you see when you're doing those processes is often there is a default process that can't with, more traditional algorithm that they can't directly verify your document. And I'm really curious to see how AI and new AI algorithm here can help in order to ensure that, one, you don't need a manual person in the way of verifying your documents, but that can be automatically, processed. That's going to significantly reduce the cost. And the other thing, it's going to make the experience way smoother and way better for the customer, because instead of waiting in some queues, you're going to be able to get improved instantly, which going to means that you can get access to the service instantly, which is a way better experience. So this, for me, is going to be one of the major cost reducer going forward.
What's the most credible near-term agentic use case?
I think if I talk about, really KYC and identity verification, the one that I mentioned, it's probably going to be a really interesting use case, and we see already a lot of vendors and players in the industry deploying that. I think another thing is I talked about where, KYB registries and so on come short when it comes to data that they have access to. I think one of the other plays, how can you leverage data as well to, sometimes enrich what you already have on your platform. This is a new way, as well to search the web, being able to, detect patterns and being able to enrich the data you have in order to have better decision making. So I think those are, some of the near-term AI use case that can see, improving the KYC experience and making it more seamless.
Okay, let's just finish off. Looking ahead, keen to get your thoughts on the new EU framework for digital identity. How do you see these new identity wallets changing the way global platforms like Booking.com verify users over the next few years?
Yeah. I see this obviously completely changing the way people will interact with identity verification, at least in the EU, but not only. We see other markets like the US and some other market like Australia as well having some of those solutions. When you look at identity verifications, you used to rely on database checks, document collections, and all those type of things. And these new mandates with eIDAS and EU wallets is basically completely, remove that and offer new ways to verify for customer. The good thing about this is, as it's a mandated framework by regulations and by the EU, this means that a lot of players are going to adopt it. So for us as a big merchants, we can tap into that ecosystem where we know we're not going to be the sole one providing the ecosystem, and a bunch of users are going to end up having their identity wallets, and we're going to be able to tap into that in order to ensure that our verifications processes are way more seamless and that customers are used to those ones that we leverage.
Perfect. We covered quite a lot of information in a quick time there. I really appreciate that. Romain, Berthome, thank you for joining the podcast.
Thank you very much. Have a nice day.
Cheers.
Bye-bye.
Okay, I'm now joined by Lloyd Hutchinson, Chief Commercial Officer of Infuse. Lloyd, thanks so much for joining us.
Thank you. Thanks for having me. Great to be here.
Okay, let's get straight into it. What's the biggest challenge you see for fintechs trying to scale across multiple jurisdictions, particularly in terms of regulation?
Yeah, sure. So in the context of Europe, there's been a number of regulatory initiatives like PSD2 and of course PSD3 to create harmonization. But I think, as we all know, each region has its own regulated entity and their own interpretation of those laws and covenants and clauses, and fundamentally that creates hurdles and challenges for any EMI, FI regulated entity. So I think, from a regs perspective, that's one thing that really stands out, but also you can't deny also then, particularly in the context of payments, in the case of Infuse, a number of our clients require a credit proposition to support the underlying processing program, and in those instances we would have to partner, and in those instances there are a number of credit providers that only have appetite for certain jurisdictions or certain countries, and then again that's another challenge for us as a company, because fundamentally we have by country a different go-to-market plan rather than one harmonized single view for Europe.
How much of your time is taken up by regulation talk and...
Yeah, so look, clearly I lead the commercial function of the business,
Yeah.
but I spend a lot of time with our chief risk officer looking at various programs, because obviously when you run a payment business, there's reputational risk, AML risk, liquidity risk, credit risk to some extent. And yeah, I think it's a big component of our business. Infuse is very much a compliance first business. It's in the fabric of the company. Top-down approach is one where we want to be a robust revenue story, and therefore we're very much looking to partner with organizations that adhere to those policies. They're conscious, they're proactive in adhering to it, rather than reactive and trying to be quite defensive.
Yeah, well, all these things kind of lead to my next question actually, because margin compression is hitting every part of the payments value chain.
Yeah.
From your perspective, where's the real pressure coming from, and how do you see issuers and processors adapting their business models to stay profitable?
Yeah, absolutely. So it's a really poignant question. I mean, where we are today, there are a number of FIs and payment institutions. I have a background in FX as well as processing today, and it's very clear if you have a standalone product proposition, singular product, there's limited value creation when you're competing with an organization that have multiple products. So in the case of processing, you might have fraud analytic capabilities, you might be able to support with bin sponsorship, again from a regulated support perspective. In FX, if you're only offering spot execution, simple conversion, as opposed to providing a front end favorable UX, IBANs, hedging, balance sheet allocation, the compression really comes when the client is looking at a standalone product. So if you're in an organization that's able to provide that multi-product environment, there will be more margin preservation.
Okay. there's a key area that's being discussed today, stablecoins,
Yes.
naturally. They're gaining traction, obviously. What do you see as the most realistic path to mainstream adoption across Europe?
So clearly, it's two lenses to this. So one, from a regulated perspective, like MiCA and the adoption of that is clearly baseline. But I think we also need to kind of flip that question on its head. Where are the use cases? And I would suggest strongly the exposure and utilization of stablecoins is still weighted to cross-border transactions where there is an emerging market exposure, LATAM corridors, Africa corridors, Southeast Asia corridors predominantly. So I think fundamentally, in the case of Europe, which was your question, businesses that have those supplier exposures or are selling their products and have income in those regions, then I see the value there clearly. But for a number of organizations, particularly in retail or traditional mid-market SME in Europe and the UK, instantaneous settlement, moving a store of value, we already have the faster payment network. So you're not necessarily solving a problem to that extent. But cross-border, the use case is very clear.
Outside of this community there, though, and all the talk here at Money 2020, I mean, how long before that, people, your general consumer are going to understand this, part of the payments process?
I mean, when I think of that,
or does it matter?
But look at A2A payments or open banking. On paper, academically, it makes a lot of sense. Right? You're saving the consumer perceivably more favourable commercial terms. But if the adoption is not there, then, and again, that's one of the biggest things in payments, right? It's the friendly UX, that adoption.
Okay, and of course, another area we're chatting about, we're kind of jumping from topic to topic here, but is AI. Again, great to understand what you see as the biggest opportunities for AI to transform the issue of processing business beyond just cost savings.
Yeah, so the two really big things that stand out in Fuse today that we see is the automation of dispute management. It bringing down resolution times from, in some instances, a couple of hours to a couple of seconds, right, for some entities, some cases. And then separately, related but different, is we're regulated by the FCA in the UK, FSA by Finland and Passport across Europe. And with that, there is substantial regulatory updates that we need to make as an organisation. The ability to screen, automate, and file those returns is another thing that really stands out. But as ever, it's how you drive the learning-based model and the information you put it, and stress testing the outcomes always having some human oversight.
Great. Right, final one for you, Lloyd. I'm going to put you on the spot here. What I'm after is a bit of future gazing.
Yes.
I want one belief that you hold about the future of European payments or compliance that if I was to ask all my other guests, they're all going to disagree with.
Yeah, so there's a big narrative about the divergence between the US and Europe, particularly around the amount of VC funds that have been raised, the scale of top-line multiples and revenue stories. And the outcome often, the narrative often is that Europe is behind the US. I think one of the things I would position is that Europe does not have an innovation problem. We do not have an innovation problem. I think we would position that we need to execute more ruthlessly, like our US colleagues in some instances, and also think bigger picture. All right, I think that's one of the major call-outs. But the theme of sovereignty isn't going to go away, given the geopolitical environment. And I think the second thing to consider also is there's a lot of talk around Euro and having our own Euro scheme. Again, I would point to the fact that I think a lot of progress and momentum will be made towards that, but it's adoption. Will consumers use it?
How far away are we for that?
I think great strides have been made. I think the political climate in the US has expedited that.
I'm putting you on the spot.
Yeah, no,
12 months, 18 months?
No, I think at least
5 years?
Look, I would point to BLIK in Poland, where you've got 6-7 of the largest banks got together, 90% of the market share, and they drove massive adoption because they harmonized the use. In Europe, we don't have that yet.
Yeah.
And if that doesn't happen, it may never happen.
Fair enough.
Yeah.
Listen, really appreciate your time. Lloyd Hutchinson, thanks so much for joining us.
Thank you. Thanks for having me.
Well, that's it for this episode from Money 2020 Europe. Thanks once again to all my guests who took the time to join me, and of course to LHV Bank for hosting us on their booth. If you've enjoyed these conversations, please do give us a positive rating and review on your podcast app of choice. And if you'd like to get in touch with us, you can do that via the contact form on our website at csuitepodcast.com, or you can find me, Russell Goldsmith, on LinkedIn. But for now, thanks for listening and goodbye.